Discipline is one of the most talked about ideas in trading. Everyone says discipline is important. Everyone agrees that discipline matters. Yet very few traders truly understand what discipline really means in practice. Most traders believe discipline is about forcing yourself to follow rules. They believe it is about being strong, strict, and mentally tough. But professional traders see discipline very differently. In this video, I want to explain what discipline in trading really is, how professional traders build it, and how discipline is the true foundation of consistency. If you stay with me until the end of this video, you will understand why discipline is not about willpower, why motivation alone never works, and how professionals stay consistent even during losing periods. This video is designed to be watched calmly from start to finish. Each idea builds slowly on the previous one. If you are serious about trading psychology and long-term consistency, consider subscribing to Bull Mindset. This channel is about helping traders think clearly, act calmly, and build professional discipline over time. Now, let us begin. Most traders struggle with discipline because they misunderstand it. They believe discipline means forcing yourself to do the right thing even when it feels uncomfortable. They try to rely on motivation. They try to rely on self-control. This works for a short time. Then it fails. Professional traders do not rely on motivation. They design their trading in a way that makes discipline easier. This is a very important difference. Discipline is not about fighting yourself every day. It is about reducing the number of decisions that require emotional effort. Professionals simplify their environment. They trade fewer setups. They trade fixed risk. They follow routines. This reduces temptation. Most undisciplined behavior comes from emotional overload. Too many charts, too many trades, too much risk. When the mind is overloaded, discipline breaks. Professional traders protect their mental energy. Another reason discipline is difficult is because trading rewards short-term excitement. Winning feels good. Losing feels bad. The brain wants to avoid pain and seek pleasure. So when traders feel bored, they overtrade. When traders feel fear, they exit early. When traders feel confidence, they increase risk. These behaviors feel natural. Discipline requires acting against these impulses. Professionals train themselves to pause. They do not act immediately on emotion. This pause is where discipline lives. Another important point is that discipline is built before the trade, not during the trade. Most traders try to be disciplined in the moment. That is too late. Professional traders prepare in advance. They decide risk before entering. They define rules before trading. They accept losses before they happen. This preparation removes emotional decisions later. Now let us talk about what discipline really looks like in trading. Discipline means trading the same way after wins and after losses. It means risking the same amount even when you feel confident. It means skipping trades when there is no setup. It means stopping when conditions are not right. This kind of consistency feels boring, but boring is stable. Stable behavior produces stable results. Professional traders do not seek excitement, they seek stability. Now let us move into real trading examples. Imagine a trader who has a clear plan. The plan says to take only 1 or 2 trades per day. But the trader feels bored. They see price moving, they enter trades that are not part of the plan. Losses follow. This is lack of discipline. The problem is not the plan. The problem is emotional impulse. Now imagine another trader. They follow the same plan. They wait patiently. They take only valid setups. Some days, they do not trade at all. They are comfortable with that. Over time, their results are stable. Same market, different discipline. Another example is after a losing streak. A trader takes several losses. Frustration builds. They want to recover quickly. They increase size or take lower quality trades. Losses grow. Professional traders respond differently. After losses, they slow down. They do not increase risk. They do not force trades. They stick to the same process. This discipline protects capital and mindset. Another example is after winning streaks. Many traders lose discipline after success. They feel confident. They feel in control. They break rules. Professional traders stay cautious, even after wins. They do not reward themselves by increasing risk. They understand that confidence can be dangerous. Now let us talk about why discipline creates consistency. Discipline removes randomness from behavior. When behavior is consistent, results become predictable over time. Without discipline, results depend on emotion. Emotion changes daily. Professional traders reduce emotional influence. They make their trading mechanical in behavior, even though the market is uncertain. Another key point is that discipline reduces stress. When you know exactly what you will do in every situation, the mind relaxes. Stress leads to mistakes. Calm leads to clarity. Discipline creates calm. Now, let us talk about mental frameworks professionals use to build discipline. One important framework is identity. Professional traders see themselves as disciplined operators. They do not identify as gamblers or risk takers. Identity shapes behavior. When you see yourself as disciplined, breaking rules feels uncomfortable. Another framework is process over outcome. Professionals judge themselves by execution, not profit. This removes emotional pressure. Money becomes feedback, not judgment. Another framework is long-term thinking. Professionals think in months and years. They do not judge themselves by one day or one week. This perspective reduces impulsive behavior. Now let us move into practical exercises you can apply. One exercise is rule clarity. Write down your rules in simple language. If rules are unclear, discipline fails. Another exercise is fixed risk. Choose a fixed risk per trade and never change it emotionally. This removes many impulsive decisions. Another exercise is pre-trade pause. Before entering a trade, pause for a few seconds. Ask if the trade follows the plan. This pause interrupts emotional impulses. Another exercise is post-trade review. Review behavior, not outcome. Did you follow rules? This reinforces discipline. Another powerful habit is routine. Professional traders follow routines. Same preparation, same trading hours, same review process. Routine reduces decision fatigue. Now let us slow down and connect everything. Discipline is not about being perfect. It is about being consistent. Professional traders still make mistakes, but their mistakes are small and controlled. They do not spiral emotionally. This stability is the real edge. If this video is helping you understand discipline more clearly, consider subscribing to Bull Mindset. This channel is dedicated to trading psychology, discipline, and long-term consistency. Let me leave you with a final thought. Discipline is not built in one day. It is built through repetition. When you focus on discipline first, profits follow naturally. Trade calmly, trade with discipline, and think long-term. I will see you in the next video. Thanks for watching.